Welcome to Caching Waves. This is an Elliott Wave update for ICP. I'm going to be talking about the micro time frames as we have a potential breakout coming. And I wanted to show you how we have this mapped out. We have a 5-wave impulse off the significant low. Back in September, we had a 6-month long impulse, clean 5-wave pattern. All our indicators point that this is an impulse right down from our divergence between the 3rd of the 3rd and the 5th of the 3rd and our 3rd wave and our 5th. We hit ideal targets for our 5th wave, the 1-to-1 extension of wave 1 off wave 4. As such, the 1-to-1, and then we corrected in a 3-wave move. We had a W, X, Y, triangle X, completed our ABC. Now, I ended up taking a more risky trade on purpose because we came right into the golden zone. I was targeting that area from down here. It was right at the 1-to-1, as you can see, at 6,419. So I ended up entering at the 618 at 6079. Stop was at the 66. Retracement of the move up at 558. So I got a very excellent entry. And I'm targeting a 3rd wave currently. Not saying this is going to work out, but if it does and we end up getting our 3rd wave, that's about a 280-to-1 risk reward. But just to be clear, chances of getting the 618 exactly and the 66 as your stop is very rare. I was willing to take that risk because everything lined up to that zone, as well as our timing. As you can see, this is just a guideline, but we usually look for about a 61.8% in time for the retracement or slightly before. More of a guideline, not a rule, but we're right into that zone, so I took that trade. Now we're going to talk about these smaller time frames. Remember, we're looking for a 5-wave move up to begin our 3rd wave. And it will look something like this. This first wave 1, right? Okay, so down on the 1-hour chart. I have not leveraged up yet. I have moved my stop, however. Right now my stop's at the actual low, so I have some extra capital to throw at it. Originally my entry was here, stop was here, so I have about half my risk to add at it currently. So what I have mapped out, remember this I had as an ABC or a wave 1. It can still be both. So I'm not sure yet. It can be a 5-wave move or it can be a 3-wave move as a diagonal. You can see we potentially have a complex correction here. And this can also turn itself, into a diagonal, right? My guess, just from experience, is this is most likely a second 1-2 than a diagonal, just because of where this wave 2 is. It doesn't really work with the trend lines, but I've seen these before where it's like the middle of the wave 3 in a diagonal is actually on the trend line. So we could get something like this, get our ABC, and that's our larger one. But as of right now, I'm going to be leveraging up as if it's a second 1-2, and we're going to launch for a 3rd rather than a diagonal. One thing to see, I put on our extension of this first move to the downside in the correction. And I put on the 1.236 and 1.382 extension of that wave. We have not invalidated yet, although it looks pretty close. That's at 835. So as soon as we come above this level, this is most likely no longer a B wave, where this can become a flat, and we're looking for a partner leg of that first move up as soon as we pass that level. And that will change my bias that this is a 1-2 as soon as that happens. Now I'm not leveraging up yet. I prefer to wait for that 1-2 and try and buy the pullback if we get a nice zigzag correction, ABC, and these will be adjusted because it looks like we need one more wave up, but I'll try and buy the 38250 and the 618. This low end stop, once we invalidate that B wave, will come up to here on my trade. So I'll be in profit, but I'll be able to leverage up by taking all this original risk and the profit and leverage up in this zone by moving my stop here. Remember, my entire risk on this entire move up will always be 1%. Some people choose to just throw their stop to break even so they can't lose in the trade and just let it run. But I prefer to get as much position size as possible to make the most out of the move if I am correct. So there's no right answer. When I'm right versus those people that just raise their stop and let it run, I will make significantly more than those people. But yeah, so anyways, this is either a ABC and we're making that diagonal, or this is a 5-wave with an extended fifth and we're making a 1-2-1-2. So I'm unclear as of yet. I want to see the reaction, right? But either way, most likely I'll move my stop up to this level after this, knowing that we can get a diagonal. But if that starts to pan out, I will probably do similar to what I'm doing with XLM and just hedge from that zone if it looks like it's a diagonal. It all depends what happens after that correction, right? Do we take off or do we kind of grind sideways, look like a diagonal pattern? I'm not sure yet, but as of right now, the labeling is 1-2-1-2. This is a running flat, so this should be the bottom of our wave 2. We should not pass through if this is the 1-2-1-2. If it's a diagonal, obviously we can come back, but we'll see what happens here. It does look quite bullish, but leaning 1-2-1-2 mostly because of this trend line and how impulsive this last move is here. I believe we even came back past the because we'd have to pull from this pivot down here. We're at the zone and it looks like we're passing through it, where I'd look for our standard diagonal to pivot, the 618 and the 786, right? Just a guideline I use, but it switches probabilities one way or another. So that's my plan, looking for this to invalidate that 1.618 so it can no longer be a B wave. Looking for an ABC, and I'll leverage up these zones. Stop will move here. If we take off, I'm letting that run, and I might even leverage up again, assuming that's a third, and stop would move here. This is how you can leverage up in the 1-2-1-2s, but I'll talk about that when we get there. And if this does kind of pivot here, come deeper than expected, and this looks like the diagonal is playing out, I'll look to hedge at the top of that trend line if we don't explode like a third, right? They look completely different. In that case, I'll probably remove this stop, hedge the total position size from up here, and let this play out, and then close the hedge lower. All right, if you have any questions about that, let me know, but it's looking good right now. I think this is a 1-2-1-2, and we'll see what we end up getting. All right, guys, that's it for ICP. Thanks for watching. I'll see you on the next one.